So as we talk, there was a gigantic drop in the market yesterday. The stock market, Dow Jones, went down by about 1,000 points or so. What precipitated this, and do you think this is an indication we're likely to have a recession in the near future?
I think there are a couple of things that have gone on over the last couple of days that contributed to the market volatility we've seen really since Friday. The first is the jobs report on Friday indicated a slightly softer trajectory for the U.S. economy than people were expecting. I think it's important to pull back at a high level and just recognize it wasn't a horrible job report. It was just softer than people were expecting. And employment levels still remain pretty robust. But it certainly took market participants by surprise, is what I would say. And market participants have been well levered toward a very soft landing. And I think they now discount that soft landing a little bit more than they did prior to this one reading. The second thing that happened is the Bank of Japan tightened rates, tightened monetary policy for the first time in a long time. Money has been very, very easy in Japan, and investors around the world have basically been borrowing in yen and investing in U.S. treasuries and getting a nice carry on that trade. And based on the Bank of Japan's movement, a bunch of investors began to unwind those trades. There were a couple other things that went on in the margin. I think there were a couple of investors that were positioned the wrong way versus volatility, and that had to be unwound, and you saw a very, very significant spike in the VIX, probably the single largest one-day move we had ever seen in the VIX. So all that created a little bit more market uncertainty and a little bit of volatility. But I wouldn't call it extraordinary by any means. I do think that we're getting a correction here after a very strong run in the markets, and that might be healthy. In terms of your question about a recession, our economists have upped their chance of a recession to 25% from 15%. All of that I think is a little lower than the broad consensus. My view is that the best chance as we look forward is, the economy will chug along and we probably won't see a recession, but the possibility is not zero, it's never zero. And I'd say it's slightly elevated from what we'd normally expect, at any moment in time.
Before yesterday, you had earlier said that you thought one or two rate cuts would be appropriate in September or before the end of the year by the Fed. Do you still think one or two rate cuts are coming, and should we do anything before September in your view?
I don't expect that you'll see anything before September. We do have a long period now. We've got 40 days until the next Fed meeting, which actually I think is a reasonable period of time for the market to digest more of the news. I'd say the market expectation is certainly for cuts in the fall. I've been more cautious around interest rate cuts all year. As you remember, the market expectation early in the year was for 6 or 7 cuts. Based on the economic data we're seeing now and the messaging from the Fed, I think it's likely that we'll see a cut or two in the fall. But I think you've still got to wait and see as things unfold. And, the economic trajectory over the next couple of months and additional economic data will certainly have an impact on that. But the Fed's in a position, David, that if the economy does soften, and I think there are some data points, I've said this repeatedly, I think there are some data points that consumer behavior is softening a little bit. The Fed has the tools or the resources at this point to kind of bolster or cushion that.